Welcome everybody and to our live Facebook, and today's topic is really talking about what sector will have the fastest recovery and how you can set up that watch list. Now many of you may have wondered, with this market in there, what kind of stocks am I ready to buy? Of course, most people first thought in their mind, if you don't have to, will be Genting and Public Bank. Am I right? Right? You're Genting and Public Bank because you visit to Genting so much. So that will be generally most people talk about. But having said that, there's nothing wrong with it. If you don't know much about the market, I think Public Bank and Genting are two of your portfolio you can set up to. But I don't do that. I'm not one of those very common mainstream kind of thing to buy Public Bank. Having said that, I do have Public Bank in my shares. I haven't sold it yet. I do know the market is undergoing extremely stressful time in here, and you have. So what I'm going to share with you some ideas that you could use to set up your watchlist portfolio. And also on top of it, very important, it pay dividend. And there is nothing really clearing out, meaning there is not what we call a shoulder of burden, okay? Because a lot of stock, as it recover, they have this shoulder of burden, they have to take care of it, right? And we're seeing that a lot, the macroeconomics and the information such as, losing sales, the COVID-19, people losing unemployment, those things will weight it down. But what I want to share with you is set up a watch list from various sectors, okay, and this is what you should do. Now remember in 2019, last year, right, our KLCI market did go down. You all remember that? Now type in what sector did very well last year in 2019. What sector did very well in 2019? You all remember or not? All right, just type it in there if you can. I really appreciate that. All right, what sector did very well? That's right, technology. Can remember, right? Everything is falling like nobody's business, just like the KLCI is falling, but technology did recover. We have a lot of small cap stock did make 100%, 200% return. Remember KAB? No one discovered by it yet, and that damn thing just shoot up and straight. So this is what we did. Yes, oil and gas also. Thank you, Leon. All right, I think most of you got it. Thank you very much. So we're going to look at some other sectors right now, okay? Because we're going to take a slower approach in here, and right now oil and gas and the one that and technology are the one that the biggest recovery in here. So I'll share you some invaluable information in here. Now, of course, those of you who are first time to the TradeVSA, do type 1, so at least I know I'm listening, but many of you who are here are the regular fans that I have. So do join our TradeVSA trading ideas here. So definitely you can get a lot of insights and some of my tips what to look for on a daily basis from our Telegram, because what you have seen so far right now, okay, it's just on a weekly basis, but I want to keep in touch with you to inform you on a daily basis, okay? So and also subscribe to our YouTube channel if you have not done so. This is where all our video that we do today are uploaded in here. Subscribe and do share it in here so you won't miss any of our video. And a lot of our talks are really by sectors, like 6 sectors to benefit from national fiberization projects and budget 2020, what stock to look out for. So we try to make things relevant in here. Not forgetting, now many of you do know that the MCO, the movement control order, was enacted and was supposed to end actually 31st, but we got extended by another 14 days, and I'm going to give you a bit of clue whether we will extend for another 14 days to 28 or not. So I'm going to go to one point about it. Do take note, this is important, so you can follow us today. We done the no, this one is the stock at 12 noon, 2:15 my colleague, Wednesday today. So do take note. Let me just put this down in here. Arif is going to come in, one of my coaches would come in and talk about this one. Yeah, 2:15 today is the CPO talk, and he's going to be the live trading with you guys if that's a possibility of a trade. And that's my session. And then 4 p.m. tomorrow will be Zach, and then I'll be back on Friday, another FCPO session here to show you how I trade live and how I make money daily. And the daily goal is only 200 to 300 ringgit. And I want you to have this skill that you can able do it while this market is tumbling. As I explained before in last Friday's session, market goes up, for the what we call the big bull run that you see right now, almost like 10 years. That's the one you can do for the stock. But in between, there's a lot of market volatility. This is where you want to make the money on down and short side. So take note of our Facebook in here. So let's get down to the fact that we talk about 4 known facts this week. Okay, 4 known facts this week. Now, for one fact, okay, this week we know that more than 700 companies, which is value, it's really been beaten down, and it's really going down, and they're really cheap. Fact number 2, this is just came out that the Bank Negara will lower our GDP target to minus 0.1, which is actually on the door. So if we have 2 negative quarters, we are going for recession. What they're trying to say, look, we are going to go to recession, but the recovery is going to come very, very soon. Earliest will be 4th quarter, which is end of the year. Now, I have talked about this. If you've been following me, my talk, I did talk about the earliest we will see the COVID will be July, early July. It all depends now. Now, US is going to be hitting that curve going up. I think if you look at it, they almost have more than, in the US, more than 100,000, and they're doing a very bad job. You can see they don't have the PPE, which is the personal protection equipment. They don't have masks, and people are still going out and walking. And only London, I think London and UK, they enacted the lockdown, but still people going out. So every country are going there. And last week, remember, I did talk about, why China has been so successful compared to the Western world. I think you all know, isn't it? What was it? Because China are very disciplined, they're very regimented. Of course, being a communist country, they listen to their bosses, okay, which is the presidency. But the Americans and the EU, they value freedom. That's why we're going to see this COVID-19 continue. And we're also seeing that also in Malaysia. You can see number of arrests about 800, 900 a day, because people generally in Malaysia, a lot of them are like B40 and M40. They may not live in a very big home, so they need to go out. All right, okay, let's look at the fact number 3. Okay, third fact number 3 is also where there's a lot of dividend stocks out there really been beaten down, and this is a lot of opportunity. So this is one of the things why I want to share with you. I want to give you that list of fastest recovery with good dividend shares, so you can put it in there, time it together with the SMARTRobie charts that will give the buy and sell signal, and you can make that kind of money. All right, so those 3 facts, so let's take note of it. Okay, take a picture of what you see in here, or you can watch this video again. Now, fact number 4, right, which is also in our TradeVSA package, of course you can get this again, is that foreign funds continue to outflow. You can see, way back, let me just, bring this laser pointer here, right? Since February 19, almost 1 month coming to 1.5 months, they've been outflowing, which also tell you, right, those masale or foreign funds want to leave, they already left. All right, so but they're selling less. So all we have to do is get one of those 2 little dips here, and we'll see this market cross back up. We do see resistance now at 1400, right? But I'm forecasting the market's not going to shoot straight up. Remember last week I talked about what are the likely model, okay? The stock market recovery model. So make sure you watch last week live FB, which I talk about it, because what I intend to do is every Wednesday is a series of information and what I observe in the market based on the macroeconomics information, and I compile it, make it easy for you to understand. So you follow it more like an episode, like a series to series. So you have not watched it, do go over to YouTube and watch that one too, or go to our Facebook, look for a video in here, right? We have tons and tons of information in here, so don't miss it. Go over to our Telegram and join that in here. All right, so very, very important. You can see foreign funds are beginning to sell less and less, but we do see resistance at 1400. Right now, I think we are at 13220. It all depends what is the stimulus, but right now, we do see a quick recovery, what I will share with you on the next slide. All right, fact number 4. Now, on the ringgit and US dollar, I think some of you may know, we have lost almost 10%, 9.8% since January. But since then, we have recovered a bit. We are around 4.3. So it does look like, we have resistance or some kind of support, which means, we're not going to go down below 4.25. I think that's going to be tough. We were likely to stay around here, retest back 4.46. Now, it all depends how we get out of the COVID-19 and how is the foreign funds coming in here. But the moral of the story is not so much that ringgit got weakened. It's just that everybody flowed to the strongest currency, which is the US dollar right now, despite what you see. Okay, how about bond funds? Are the money equating with the bonds? What is the fund? Now, bond funds, in terms of the stock market, it's no correlation. Okay, more important is the foreign fund flowing in to the stock market. That's what dictates the stock market, because we're talking in the context of the stock market. All right, thanks a lot, Wong, for your question in here. So we do look at the foreign funds in here. So now let's look at the breakdown of the COVID-19 in here. And so back to here, this point I always talk about. So moving forward, I do hope that you hear my advice in here. Start thinking about moving your portfolio outside of Malaysia. You may not do it in 2020, but when I talk about it in 2021, I hope you have done so. At least you take 1 year to start moving your portfolio outside of US, and then that's where you protect it. I'll give you one example. Like a lot of those robo-advisors, stash away, they actually invest for you in US, right? Because there's more information out there, it's more liquid. So a lot of the foreign funds that you buy, a lot of the foreign unit trusts they buy, they're actually, buying, Apple, they're buying things. So do watch out for some of the foreign funds talk that we talk about in here, where we look at the US market, but I generally cover them on my courses, because I don't want to talk about too much away where generally the Malaysian public are still very, very in infant stage. So they only talk about local stock market. So when you talk about US market, you say, wow, that is way, way outwards. But then again, listen to me, hear me, diversify outside of ringgit. You see that the whole point here is you can see the ringgit versus the US dollar, right? And this is what's going to happen. Will lower interest rate encourage investors? No. The interest rate has no meaning when it comes to Bursa. Bursa is dictated by foreign funds flows. All right, I hope I answered you, Wong. Okay, so let's break down on the COVID-19 that we see here. Now, on the COVID-19, what we have so far as Malaysia, Japan in here, we are pretty much where we are, and we are really accelerating. You can see Spain, France, US, and UK. Let me just take this one here. Already, they really advanced. Okay, let me take my pen here. Okay, here. US, UK, Japan is still there. They are really much in the advanced stage here, advanced stage in here, and Spain, Malaysia is there. I think more importantly is, I know for many of you, you are really counting the number of deaths. To me, it's not important on the death, because that's more like the kind of medicine that are more important is the number of infection daily, right? We hit 200, then we got 150 Malaysian contacts, 100 and 100, I think 150, 130. But once we see that number start to drop to single digit, maybe the 90 plus, 80 plus, that's good. That means, we're going to be in a recovery. This is a bit like stock market. Market is going through stage 1 accumulation, stage 2, right? You guys, you remember that, right? This is what I usually teach on on our courses, stage 1, stage 2, and then you hit the peak, which is the panic stage. Okay, so we are somewhere. We don't know yet. We continue to see the numbers. If the numbers started to accelerate, then it'll be great. I personally hope that we are here. Okay, we are here, then we will move downwards. All right. So now if you look at the daily cases, you can go to Malaysia Kini and check that one. So you can just want to see this, this spike going higher, right? This is number of infection cases. We want it to come back down, right? This is what we call number of infection. Why? Because this is how soon we can get out from the MCO, that you and me are locked down at home. And a lot of people attempted to go out, they kena fine, right? And this is what we are really seeing that here. Okay. Now, okay, let's talk about flattening the COVID-19 curve in Malaysia. Okay, as of 5:20 yesterday, we have 43 deaths, 500 old people. We are in treatment 2,000 over in there. And you can see the confirmed cases in here is the 2,700, which is this mark here, 2,766. So I do hope that, this is the projection by JP Morgan, where we hit, 6,005, maybe 6,000 to 6,200. So also our MOH, right? And also say that, look, they are trying to ensure that we don't get there. This is number of positive cases. Okay, because our frontliner in here, which is the healthcare, are trying as much as possible, preparing all the beds. And even if you switch on to CNN, you can see the Americans, the biggest epicenter of infection now is in New York. Everybody's sort of like, getting out. And I was just listening to the CNN. It's like, there's 7,000 calls a day, about people getting sick. So how many ambulance can go out? There's a lot of people are dying at home. Right, and that's the situation. Luckily for us in Malaysia, we don't too, but we still have a lot of very stubborn people. They don't go out for tests. Again, education is important. We are very lucky, to be frank with you, being in Malaysia compared to some of my friends in US and UK and Australia or in a European country. We're doing so much better, except for Germany. Germany is doing very well because the number of infection cases, I think many of you would know, are younger, so they don't have this. So this is where we are. What I do hope is that we hit this and then we come back down. So you look here, we got another maybe 1 to 1.5 weeks to the peak. Okay, so that is why the next 2 weeks, okay, to 14th of April is important. If we get out of it, we do, but it all depends. If we started to pick up here, I think we'll extend for 2 more weeks to 28th of April. Okay, because that is where the route. Now, what I'm trying, this is my personal belief. See whether you agree with me or not. All right, it's because they're trying to flatten up the curve so they can leave they can leave the MCO, so many of our Muslim friends and us can go out and enjoy the Hari Raya, because we've been cooped up in the house for too long. A lot of people are getting what we call cabin fever. They are sick being out, so we need to get this done, and that's why, again, stay at home. Do I say this makes sense? Okay. Okay, what is the percentage of SME listed in what are the implement of Favorite? We don't look at that, okay? On your question here, percentage of SME is not important because we are doing selective counters is important, okay? We are looking at selective counter, and a lot of our sectors that we look at must be export-based. It is very important to have export base, so when the market recover, we will start to push back on. In Malaysia, I generally tell people, avoid any domestic demand in Malaysia, except maybe for making face masks and things like that. Malaysia is already a gone case, right? Our GDP with the new government, I don't think foreign funds is going to come in because the policy that is set in is not good. But I'll keep that as another topic. That's why I don't encourage people to look into Malaysia. For my own portfolio, I'm already moved everything, most of them to US. Only few of those which is export based, then I look at it. All right. So let's take note. So let's go forward to US now. Now, US House Democrat have introduced 2.5 trillion, and they even say that this amount is not enough because with the number of cases that is coming out, as more states have been locked up. For your information, it is against the Constitution Amendment of US to actually have a full lockdown in their country. You cannot. Even people are suing some of the local governments for closing down the gun shops because a lot of people want to go and buy guns. You know about the amendment of this gun law in here. So this is what's really happening in US. So they said 2.5 trillion not enough. They even thought of putting another 4 more trillion. That's about close to about 6.5 trillion coming inside. So that's going to be a lot of money going inside there. People just have so much money inside. Of course, people will say that, look, what is the debt? To it, how do we control the debt? As long as they continue to innovate US, people continue to spend and continue to collect tax, the debt level, I think now US debt level is almost about 22 trillion. And Malaysia deficit now I think has shot through maybe around 4%. We used to be trying to keep at 3.3% of deficit, but we're going to shoot through it because of now the government's giving out 200 million. Our reserve is about 103 billions in there. So all this is going to come from at the expense of the future. All right. So this is going to come in at the expense of future. So right now, that's why I said before, the market will have a recovery. It's looking a V recovery, which last week I talked about the love model, the market recovery. I prefer to see a U recovery. So look into my last week slide, what I talked about the U and the V. Okay, now if you look at the Dow Jones, this is where we are from the top in February onwards. This is a February time frame. Let me just type this down. Yeah, this is February, okay, mid-February, okay, and the market fall by almost 39%. Right now it recovered very fast, but you can see this is the 2 technical moving average that we use, all right, and it's heading in that. So to me, it looks like it's going to come back down here. So that's what I said last week. The market we have seen here, what we want to see is actually forming of a double bottom, okay. In technical terms, you want to see a double bottom. That would confirm the bottom, and then we would buy here, okay? So I'm looking to buy a lot of the US stocks. A lot of them are bargains, and they've been beaten down a lot in here. No doubt, US will recover. If you look back some of the previous talk I talked about, the SARS, how much they rebound back, you will probably have some sort of figure around there. So look back to some of the OP. So this is an area where we want to really buy when the market dip back down. So today, I think last night the market went down by 400 points. We will see a bit more selling inside there. Don't worry, we already hit that bottom right here. Okay, this bottom is the lowest point. Okay, this is the lowest point at almost 18,500 in here. Okay, so that's now. What if you are Warren Buffett? If you are thinking like Warren Buffett, what would you do? What would you look at? Now, this is where we teach people ready to buy at accumulation stage. Okay, ready to buy accumulation stage. I'm going to give you the stock list after this. So buy accumulation, some of you who've been following would know the stage 1. And then look for undervalued and dividend paying stock that is export based. Very important, the export based. That is why I never look at stocks like Genting. Okay, never look at stocks like Genting. Stocks like a public bank tend to be driven by what's happening in the country, because a lot of them depending on the S&P. I don't think there is going to be a lot of non-performing loans, right? Because a lot of these companies are been having a really bad time in there. So I do see that they will take some time to really coming up from it. All right. Okay. If you have any question, do let me know. All right. So let's look at the list here. So Martin, after what you've been saying for the last, half an hour, what's the fastest sector to recover, isn't it? Right? That's always the question, because this is what the topic's all about. So I really appreciate you guys for really coming today and sharing it. So I'm going to go through now this is where you can take a photo. I hope the screenshot is good for you. You take a photo of this one. I'm just going to share with you. This is from the KLCI top 100 in here. And let me look at this indicative yield. Okay, this is the yield. All right, this is the top 100. And this is the mid 70s. Okay. All right. Now, which sector to watch for, which sector to avoid? I think that's very important. Just don't buy buta lah. A lot of people say, wow, BAT give almost 12% dividend buy, but stock price go down. Don't be like that lah. All right. You have to be bit smart lah. Just don't chase every FD inside there. Right now, we all know about why BAT used to be around. BAT used to be around $60. So now 10 ringgit only. Lost about 32% inside there. Then there is a second one on the list. There is a Mazda Auto. With the difficult time that we see car sales, is it going to grow or not? All right. So I'm going to give you my other list inside here. Let's look at another list. Have you taken picture for this one? Okay. Will aviation recover anytime? I would tell people avoid aviation too. Right. It'll be a while that before people start to. They will drive first before they fly. Okay. Drive first before they fly. Okay. Okay. You have taken picture of this one in here. I hope you can do so. Right. And so the next one. Okay. The next list is the FBM KLCI. Again, I want to circle this for you. Okay. Circle this. This is this one here. Okay. Circle this one in here, and you can see that list of dividend in here. All right. Now this is sort of like the public list. You can see Genting right at the bottom here. All right. Genting right at the bottom there is giving 5.58. Now these are based on old dividend, assuming the banks or this company don't deduct their dividend. Okay. Right, and this then AMB 7%, 3% inside here. So this is where I tell you and I tell my members, be a bit smarter, be selective. Okay, just don't dungu and buy. You want to have two things when you buy, not only collect dividend, you also want price appreciation. All right, I'm going to show you which sector will move the furthest just down. So stay with me and do share this video out there. This will be really good. So just set up this dividend list inside here. Have a few lists there and not. I'm very happy you can send this list. I'm very happy to review it through. Some people may ask me, Martin, why don't you buy rubber glove again? Rubber glove already priced there already. When the market recover, right, I tell you what, the rubber glove is just going to stay there. It's probably going to come down, right? Because later on, one of the stocks I'm going to share with you here too. Okay, so a special note, and this came out on the SMARTRobie Facebook. Do go over to SMARTRobie. Now KGB has been one of the stocks that I do have, and all of a sudden, it pops out and it's giving you a 7, a 7 rating. That is very, very high. The highest rating you can get is 8, and it gives a 2.3% a dividend, because this is one of the stocks where we potentially see have growth, have dividend. Right. Right now I can't remember, but the target price of 81 cent, 10.5, which is actually another 6%. It has moved up quite a fair bit. But if you look at the news that just came out, there will be some delay in investment, right, being held back, and the price being taken up. But once mid-July inside that, you cannot buy on things that already confirmed. By the time when you come up to July, a lot of things already confirmed. This stock already jalan, which I'm going to share with you why the economic indicator and the stock market indicator, they lag for some time. So the middle one is a QR code. Okay, if you can take a picture of it, you can subscribe to SMARTRobie report. A report like this will be sent to you every day. All right, based on what I see in the market, and it's completely free using the SMARTRobie and using the news that you get daily. All right. So let's look at the sectors inside here. From terms of the Sharia compliance sectors, what are the sectors we want to look at? This is a slightly older slides in here. There's about 689, but overall we can group it up to 13 main sectors, right? Construction, consumer, energy, financial, healthcare, industrial product, plantation, property, technology, telco. So out of this, which one will recover fastest? That is always the key. Now let's look at the traditional model, which is, many of you may have studied, and I have studied during my economic. But hey, before we do that, World Bank just lowered the GDP growth. Are we doing what's happening? Are we going to have a recession in here? Right? So what should I do with my existing portfolio? Should I sell? Should I buy more? What should I do? But before you sell, look at what you have. First, you got to review back on your portfolio. Are you trading? Are you investing? I think that's very important. So in our courses, in our students, we always tell them, and we always tell them to use the pie chart. How much you should allocate to trading, how much you allocated to income trading, which is what futures is all about, where you're trying to make 200 to 300 ringgit a day. And then in a few weeks, that's a couple of $1,000, all right? With a small capital, you're able to do so. And how much you want to target this. Because in the market, there is plenty of opportunity, ladies and gentlemen. You just have to see through what I see, plus what our member been trained to see, and continue to follow up and all this information in here. All right. So I think this is why it's important. And if you look at it, this is very important. What we look at, the economic cycle and the market cycle. The traditional sector here. Now, very important, this information, right here. All right. The market will bottom first. Then only the recession, 1 and then 2, okay? And it actually lags 6 to 9 months. Remember that information been out, say that we're going to go recession soon. We're going to recover. So it means the recession number will come, but the market will start to move up here, okay? So that is why we try to look for the double bottom, okay? The double bottom on the Bursa Malaysia. Okay, and then we buy here, and when the market start to move up, they will declare recession. That's where people will start to sell. You already have those already. So my important information for you is to buy on the market stages, buy on the technicals, buy on the price and volume, buy using volume spread analysis. Don't buy when you see the newspapers say, oh, the market recover, start to buy. Then it'll be a bit late already. You can see here, by the time you do early recovery, you're already at the market top. You can see, right? This is the blue one is the economic, all right? And the red one is the stock market. So assume this is a Bursa, okay? Bursa Malaysia, or the KLCI. Okay. If you like what we see so far, give me a thumbs up here. Okay, then I'll continue. Now this sector rotation doesn't work very well. This is more US centric rotation. You can see you rotate from energy, technology here. Okay, you move from finance to technology to basic material to energy to healthcare and so forth. It doesn't work like that in the Malaysian context. Okay, you got to do a bit more way. Okay, but the one that I do feel, to sum it up to you, I know there's a lot of information you need to crunch. Then you might say, hey, do I need an economics degree to understand it? You don't need to. Let me summarize for you. Let me just give you the facts. All right. So if you look back at 2008 and 2009 market recovery, all right, consumer sector were the one fall the less. They fell the less actually. They recovered the fastest. So if you look at this is from TradingView, you can see here, this is the consumer. Okay, this one is all the others, the technology, the property, the consumer and so forth, but doesn't matter. Very important here, consumer fall there, they recover the fastest. All other sectors, industrial product, construction, and property will recover. But for me, I would tell people, and I'll tell you, avoid property and finance at best. Okay, property and finance at best, because it will take a lot of time. Especially now, many of our Malaysian property, they are overseas driven. They have projects in Australia, they have projects in Hong Kong, and especially UK too. I generally tell people to avoid property. It's a trading share, not so much of recovering share. It will take a long time before the property sector really come back up in here. So sectors, consumer, technology in here. Okay, now for the next slide, very important, get your camera ready. Okay, because I'm going to give you those stocks. Okay, you ready? Okay. Yeah, this is so for Bursa Malaysia fastest sector recovery, we use our TradeVSA screener Insight, which is one of our premium package that you have. So we're looking at consumer staple, product, industrial product, utility, and technology. So you can see in here, this is where we actually drill down to those stocks and look for the right timing to go in. Okay, and whether they pay dividend or not. So we actually use our TradeVSA screener. But for today's presentation, I'm just going to stick to the public consensus in here. I'm going to give you my personal list also, right? So if you look at the public consensus list that is out there, these are the one that I like. You know, Public Bank pay about a 4.6% dividend, Nestle 2%, and that one has fallen to 136, used to be 146, and also Hapsing consolidation 4.46. The other one are big thing, they are not highly valued because I use SMARTRobie to look at the ratings. Okay, so out of those two lists I've given to you, right, these are the three that I generally like. And remember, I avoided the construction. All right, I avoided the finance, with the exception of Public Bank. I know many of you are Public Bank lover, right? Giving a 4.5%. If you have to, you're not going to lose money if you buy Public Bank, but you're not going to make big too. All right. So Nestle and Hapsing, I think that one will hold true, and they tend to recover. Why I know about Nestle is because during the 2008 and 9 crisis, which I bear through during my days as a fund manager, we recovered the fastest. Nestle is the one that recovered the fastest too. Okay, so this is a list. Now on my personal favorite list, this is the one you should take photo of, right? Is with dividend. Now Magna Tech, Axis REITs, Guangchong, Uchi Tech, Suncon, and KGB. You can see all these have very high 5 and above rating. KGB is actually 7. I think it's gone up to 7 already. All right. So the details, use Robie to check up all the details that they're using the dividend and the target price if you want to. I generally like Magnatech. Magnatech is actually OEM for Nike. So if you notice, if you put Magnatech side by side, it's actually correlated to Nike. Right, no doubt this round they are beaten a lot with also the Tokyo 2020 Olympics being postponed to July next year, 2021. So a lot of the apparels will be affected again. But they do have cash rich. Magnatech have about 300 million cash, zero debt position in here. They are expanding and they're moving over to Vietnam. All right, you can read all about it. Go over to Robie under the news. Right. You can pick up the headline about that. So next one is exit REITs. For those REITs lover, pay almost a 6 or 8% dividend. Because of the dividend payment, all right, the valuation tend to be higher. That's why it gets a rating of 1. It's a logistic player. Guangzhou chocolate one, I think it's been doing quite well, doing a lot of export-based, food-based, 6 out of 8. Uchitech Technology pays a very handsome dividend. Check it out on Dividend. And then Sunway Construction just came out. And these are the things that I posted on the facebook.com/SmartRobie, or you can catch it up on the free Robie report every day. Okay, so Suncon is rated 5 out of 8, a construction website. There was a project they just won in India. Again, these things will be delayed because all the uncertainty of the COVID virus that you see, definitely for sure. And then KGB, which I just talked about in there, some projects will be delayed, but I do think eventually these things will kickstart and the market is moving. Now remember, at the darkest hour, ladies and gentlemen, we are at the darkest hour. I've showed you the COVID-19, how bad it is. You and me, we are all locked at home. So what the best we can do? Learn a new skill, learn how to invest, learn how to trade to make income. That's all we can do. Or either that, many people do is try to go out during the MCO and get what? Or go jogging and climb mountain. They can do a lot of trouble. Learn a new skill. All right, ladies and gentlemen. Do what I say this makes sense. Interruption, no sound. Okay, I don't know why, but is the sound coming in okay for the rest of the guys? Okay? The rest of people okay? Is the sound coming in okay for the rest of you? Just make sure I do this first before I continue. And I think to me, this is a list that you're not going to lose money. Right? But if the market do take off, do thank me and do support us. Thank you very much. Okay, because these are the lists I'm going to get from my clients anyway. All right. Okay, let's move on. Okay, so next is our MCO period. Our MCO period has been extended, so we continue to do this to take note of it. Trade from home, continue to watch us. Today at 2:15 will be FCPO, my fellow colleague and coach Arif will take you through 2:15. So very fast, 1 more hour from now, while I take a break and have a lunch. Okay, now when to buy, I think very important is use the KLCI market. If you get into a copy of Robie and install in here, we are right where we are here. You can see here, right? So what we need to do is wait for the green Pentagon like this one in here. So when the green Pentagon comes, it's a time you can start buying that one. But right now, I do think that this market is going to come back and retest the 1300 level in here. All right, so very important that we want the market to form what? Anybody can remember? What do we want the market to form? Okay, so let me write it down for you if you don't do. All right, what we want to see is a double bottom. Okay, double bottom. So go up, we want it to come down here and then go back. Classic pattern. Okay, these are classic Wyckoff pattern. Okay. And look at the volume too. The volume I'll share with you, those of you who join in the Telegram, how to look at the volume too. Also, so make sure you join our Telegram. Okay, that's right, double bottom. Many of you are well with that, and then the market go back up. So go to fb.com/SmartRobie, go and like this. So every time the information are posted, you will get a copy of the ideas that you have. Then use Robie to look at the charts. And very important, I'm trying to move you guys more for looking at value, right? Trading it, investing it. And there are some trades that has a little bit of speculations. You can use the structured call and structured put warrant with Macquarie, which is I find very, very, it will enhance the return that you have. Okay. So do take note that those of you who are interested to subscribe to our premium screener package, we have the FADIDO, the value shares and dividend shares. Whether you're looking at technology, that will help you enhance it too. Okay. Do subscribe to our Robie report free one here. That is a QR code, so you can take photo and every day will be sent to you. Then you don't really have to follow. So you can see this is a copy of the email sent to you. Here are 2 counters and red tone OCF. And the whole point is giving you a lot of ideas so you can know what to do with information. Now the third one that I always talk about why we do FCPO is keep calm and trade futures. Okay, so keep calm and trade futures. This is the one that you can make money. And one reason why we do this is if you've been affected by COVID, pay cut, job loss, learn to have another income, earn 6 to 10% daily, right? Pay cut in here, all right? So this is one of the trades that I did yesterday and I shared in live FB. You can see sharing my live trading, a daily goal $200 to $300 per day during MCO. This is a trade that we did using our tools. Because, like yesterday, the FCPO went up. I think some of my members, coaches made about 300 or 400, just the market opening session. I haven't looked at yet today, the CPO. So I'm just taking a break in here. And this is one of our members in here. There was a good day, made about 1,675 for one session. I think that's more like just less than about an hour or 2, that's all. So all these techniques and tools, we give it to you to share with you on top of stocks. So stocks and future, we do it together in our workshop. Okay, so follow us again, our program in here, and I'll stop here. Okay, so I'll stop here. I think I've done very nice 45 minutes of talk to keep you entertained, to keep you interested. And next week, if you guys want any special topic, hi Miss Kui, okay, if you guys want any special topic that you all want me to talk about, do WhatsApp to me and share in the group there. But usually I'll find something where if you see recovery, what are the stocks to look for, or we want to do a bit of trading, just to keep you in what's out there, okay? Because we feel that with the volume spread analysis, we are ahead of most people because we don't look at so much of the macroeconomics. The macroeconomics probably confirm what we see on the charts. Remember, we talk about the economic and what was that? The economic and the market, the lagging effect, which means stock market are generally 6 to 9 months ahead of the economic factor. Just take note of that one, okay? So that's all I have today in here. Those of you do follow us back at 2:15 today. Have a lunch. Come back at 2:15, and my fellow colleague Arif will take you through FCPO. And then on Friday, I'll be back again and to do live trading CPO. Maybe we make some money together. I'm going to show you some of the tools that I use, but follow us then, okay? If you have any question, do post it in there. I'm happy to help you. But generally, I want to keep this happy, keep it snappy, that you and me at least has something to look forward after the MCO is ordered. At least I learned a new skill. Am I right? So give me a thumbs up. Do share this video in your level.